Welcome to the BuyBox Experts podcast. We bring to light the unique opportunities brands face in today's e-commerce world.
Hi, I'm James Thompson, one of the hosts of the BuyBox Experts podcast. I'm a partner with BuyBox Experts and the former business head of the Selling on Amazon team at Amazon, as well as the first account manager for the Fulfillment by Amazon program. I'm the co-author of a couple of books on Amazon, including the recent book, Controlling Your Brand in the Age of Amazon. Today's episode is brought to you by BuyBox Experts. BuyBox Experts takes ambitious brands and makes them unbeatable. When you hire BuyBox Experts, you receive the strategy optimization and marketing performance to succeed on Amazon. We also support investors with due diligence services. Go to buyboxexperts.com to learn more. Before I introduce our guest today, I want to send a big shout out to the team at Disruptive Advertising. For off-Amazon advertising, Disruptive Advertising offers the highest level of service in the digital marketing industry. Focusing on driving traffic, converting traffic, and enterprise analytics, Disruptive helps their clients increase their bottom line month after month. Check out disruptiveadvertising.com to learn more. Our guest today is Nick Tuzenko, founder of Accel Club, a firm that acquires Amazon FBA businesses. Previously, Nick was Managing Director of Busfor, a firm that streamlined the bus transportation industry by developing technological solutions that connect bus operators and carriers with travelers. Nick has also been a management consultant. Nick, welcome, and thank you for joining us today on the BuyBox Experts podcast.
Yeah, thanks, James, and thanks for hosting me today here. Yeah.
So Nick, FBA private label businesses are a very hot commodity these days. What do you believe has happened to generate this recent interest in businesses that have, quite frankly, been around since the beginning of the Amazon marketplaces?
Yeah, I guess there's let's say three different factors here. First of all, the big size. Yeah, definitely the marketplace we're here for the last 20 years, but definitely that's what happened with COVID. Definitely, that we see that for the 3 or 6 months, they just condensed. I don't know, maybe 3 or 5 years that should happen if there is no COVID.
Uh-huh.
So would you believe that the big size of the market itself? Definitely there is the story of Thrasio, and a lot of guys heard about them, and also what we believe that and also on what we based our approach is that we've seen that, for example, with Anchor, who is the organic seller there.
Yes.
They were really great. Evaluated by the public market. So they went to IPO last, it was summer or autumn, and it was really great success. So we do believe that all these three factors, big size, the successful traction of Thrasio, and let's say the public markets that valued the organic sellers inside the Amazon ecosystem really highly. This is these three factors that bring a lot of money, a lot of funding here, and this is why investors are really interested in this market.
So Nick, what do you think is going to happen in the next 2 years as the number of FBA aggregators continues to grow and they're all looking for successful private label brands?
Yeah. In what we believe that there's a lot of really great teams. But definitely we believe that the markets right now is really hot. Yeah, as usual. Yeah, there is this kind of bubbles. Yeah, so there will be definitely correction.
Uh-huh.
And would you believe that maybe half of the teams that are right now in the market that will not be with us in 1 or 2 years, and maybe definitely there will be some merger and acquisition between the FBA aggregators.
Yes.
Happens usually. So. And but yeah, and also what already happened, the biggest one, the one that Thrasio and other guys, they also exploring and right now focusing a little bit more on launching products. So we do believe that it's FBA aggregation is the only option how to enter the market. It's not about the business model itself. Yeah, so it's more about how you would like to be in top 50 or in top 100 sellers in 2 or 3 years. There's two options. A, you could build and test and launch a lot of different products. or B, you could just like starting aggregating some successful FBA sellers. And then like definitely at some point of time, you need to at least like mix both like buying and launching. And definitely with the time going, we do believe that I would say like the strongest FBA aggregators, they will be much more focusing on launching new products, on testing new products, than on buying. Yeah. So yeah. So this is how we see the evolution of that.
You didn't grow up as an FBA private label seller. So let me ask you, what drew you to the space and what kinds of issues have surprised you most as you learn more and more about the subculture of entrepreneur that is the Amazon private label seller?
Yeah, it's like there's like we founded Accel Club with my partner Max, and we really had a great experience with digital. So we sold like Busfor, you mentioned that, the bus ticket marketplace. It was also marketplace, but without physical product. Yeah? So it was like bus ticket marketplace. We sold that to BlaBlaCar for 100 million euros. And also Max was the founder and the CEO of like food delivery company. So we do know a lot about like operations, and we really believe in digital. And I'm definitely with COVID, it's much more let's say easier to see that the digital is our everything for the next like 10 12 years. Yeah, but yeah, like we definitely believe in digital, A, and B, we do believe that here's like the our expertise, our skill set. Yeah, and the ambitions that we have, like to build like some global company. This market is like gives us this opportunity. It's big enough, it's really global. I'm like every value chain from supply, logistics is like really global. Like 70-80% of products they are coming through China or through other countries, and the customers also all over the world, like US, EU, UK. So yeah, I'm like it's a really great market. But from the other point of view, like we are not the one that comes from like finance or from banking backgrounds. So we are much more like, I would say, like operational guys. Yeah. So we do we have like a teams for like 100 people and making like 30, 50 transactions, 30, 50,000 transactions a day. So we know like how hard it's like all this operational business and how hard it was like. What I believe that's the real challenging with marketplace and with selling, it isn't that it's very easy for each micro step. There is no like rocket science, to do like supply chain or listing or PPC or whatever. But what really like drives here the value and what you do really like make the difference between like the great seller, the great FBA aggregator, and the not that good is like the ability to operate, to execute that kind of complexity. Yeah? So that kind of like 800 micro steps, all them to work at the end of the day and to deliver the real value to the customer, to the end customer. So this like, and we believe that we could make that happen. So this, and it's what we are right now executing. So this is why we ended here.
So tell me a little bit about some of the early experiences you've had meeting some of these FBA aggregators. What surprises you the most about these types of entrepreneurs?
It's like I would say that there is a lot of different stuff that surprised me. And it's like when I was building this bus marketplace, there was also like we have like I guess like 1,200 different partners, bus carriers, bus stations.
Okay.
And there it also like very similar in terms of like the background and the the nature of the people that are doing that business. So usually they have like 5-10 different buses. They operate in a lot of stuff like by themselves. And it's like that kind of like entrepreneurship there. It's like plus minus the same. And also we could also we also seen that different like people with different backgrounds. So this is also what we see here. I would say like a really great diversity of different backgrounds, of different like goals that people trying to fulfill with this venture, this business. So there's like definitely a significant part of the sellers, they are, I would say, like digital native. Yeah? So they are whether a digital marketer working like on other companies, or they are engineers, yeah, and and they do believe in digital. They do know the digital are really great, and but they less like in the physical world, yeah. And there's a lot of like entrepreneurs that just trying to they have like great ideas of the products, yeah, and they are less like sophisticated with this PPC, with AI, with that SEO optimization, with that algorithm, how that
Yes,
works.
yes.
Yeah, so I'm like, yeah, I'm like, what is really really great about this market is this like great diversity of backgrounds, of skill sets, of different goals that people trying to fulfill with their FBA businesses. And this is really, really great when you meet that every day. Like, and it's really, really, really cool. So it's not like routine. Yeah, it's like every day, like new story and new people. They're really cool. Yeah.
So let me ask you this: the Amazon marketplaces around the world, they're there to help bring better, cheaper versions of products, and private label sellers are taking advantage of this marketplace to introduce better, cheaper versions of products that people may have already seen. As you think about the willingness of people to get into private label, and you look at all the accessible manufacturing capacity that's available around the world, that's drawing a lot of folks into building private label brands, folks that might not otherwise jump into being entrepreneurs. How does an investment group like yours leverage all of this enthusiasm, not just with companies that are already asking you to buy their companies, but how do you leverage the enthusiasm around helping to think about building out this marketplace further and building a long-term stream of potential acquisition targets?
Yeah, and also I do believe that it hasn't yet happened that this like this fact isn't like right now in the market. So we are not relying on that, and I don't believe that any current player rely on that. What we believe that it's like right now what's happening is the demand itself isn't that consolidated as it appears. So we do believe that it's like they a lot of like a lot of FBA brands they are and they will stay the micro brands. So in what we believe that it's like the demand it's like with YouTube, yeah. So and like before, like when there was like TV only, the producer make judge whether everyone's like today there's broadcasting this program or that program, yeah.
Yes.
And with YouTube you could like there's like this like as we could call it liberalization of distribution. So this like what happens with marketplaces. We do believe that marketplaces what they bring like the liberalization of the distribution of physical products. So everyone with this or that idea could like afford without a big budgets or without like TV promotions, without all that stuff, a little bit more like on based on variable parts of their costs, like launch products. And what we believe that this like A and B, it's like there is this kind of like feedback loop. So what you never seen like in Tesco or in Walmart, like on physical stores, there's no like no feedback. Yeah? So you don't know like how many people bought this or that, what's the rating, what's like what the feedback, yeah. And this is what we believe that right now the aggregation is much more focused, and this is definitely make perfect sense for us at the first stage around this like feedback loops. So I'm like right now it's much more easier to buy, to scale, to to support that brand that maybe isn't that good on the supply chain side, but have that kind of like product market fit momentum that we call that, yeah. And the price and the margins and the like ratings, the conversions to ratings, the rating itself, like dynamics ratings is great. So and then definitely I do believe that the factor that you mentioned at the beginning of this question will definitely be there, but this will be like the second or the third step within this game. Yeah. So after this consolidation of the reviews of the feedback, after that, like players like us will try to optimize the supply chain to better understand like how to deal with different like suppliers across all our brands. But it will be like definitely the it's like the game on the next level. Yeah,
so there are already thousands of private label brands that are interested in selling, and I imagine hundreds of them come to see you every week, every month. How do you evaluate these different companies and try to make sense of what might be interesting versus what is definitely not interesting to you?
Yeah, it's like it's very straightforward, I would say. So it's like there's like the definitely the criteria for the size. Yeah, so we definitely would love to see there like the product momentum, market fit. Yeah, so this we call that in terms of like the definitely the size of the business. So it's hard to say if there's like 300, for example, annual sales, whether there's like product market fit momentum or not. Yeah, so it
Yes.
starts somewhere in terms like the 1 or 2 millions in annual sales. Definitely the fragmentation of the business. Yeah. So if you have like 100 SKUs and your major SEO or listing is contributing, for example, like 8% of the sales, it isn't something that interested for us or for any other FBA aggregators. Yeah, because we are diversifying on the portfolio level, not on the level of one business. Yeah. So this also like we are searching for let's say like the hero SKUs rather than the business that is well diversified and there's like 30, 40 different listings that are good. Definitely profit margins, definitely definitely private labels. So we're talking only about private labels. Yeah.
Yes.
So
Yes.
trademarks, brand registry, no IP rights or refrigeration. So nothing like So we also like checking that. Definitely sometimes like sellers don't even know that they like refrigerate this or that like patent or trademark or
Yep.
something like
Yep.
that. Yeah. So it's also like what we assessing and estimate on our side. But I'm like this is like I would say that this like plus minus 8. Yeah. So a good like product market momentum, and the financial metrics like profitability, and like the number of sales per day, and that's it. Yeah.
So many of the aggregators, at least a year ago, were relying on FBA brokers as their primary source of deals. How do you think about this long-term approach of aggregators looking for other types of sources, whether it's private sources of deals, whether it's going out and finding their own types of companies? How do you see brokers continuing to be involved in these transactions?
Yeah, there's like definitely two main value that broker brings to this market. The first one, if there were I don't know, like let's say like 2 or 3 or 5 buyers, then for seller to reach to each of them and to talk to them would be like very easy. Yeah.
Yep.
But definitely when there is like I don't know, like 50, 100 buyers, I couldn't imagine any seller who will go to every buyers
Yes.
and talk to them. So it doesn't
Yes.
make any sense. So this like this navigation problem that a broker could help you to solve. So if the broker is really experienced and already know a lot of guys, like a lot of buyers, they could like easily like recommend you to go to this guys or to that guys because they knew like they know like other profiles in terms of like risk profile, in terms of like investor profile, and they could really fast recommend you these 3-5 buyers, and then you will make a deal. The second one is definitely because like as usual on any let's say unmature market, the sellers, they are not the professional like bankers. Yeah, so they are sometimes they just don't know like what's like is good, what isn't good. Yeah, so for example, let's say this way, some sellers really believe that if they uses every levers that are there with Amazon, then they have like the greatest business. But it's not true. Like FBA buyers, as we are searching and trying to assess what else we could optimize, or what else we could like make better for this brand to grow like for the next like 1 to 3 years. And if we realize that all the levers are utilized, then I'm like it's less attractive to us. Yeah, so it's very easy to understand. Yeah, and for example, if there is like less levers utilized and you have the same amount of revenue and profitability, then we are like much more like attracted by this business because we do understand that okay, like maybe that levers, and we will have like much bigger and much profitable, or let's say like much sustainable business. So and so the second value that broker definitely brings here, they like teach sellers how to sell their business, how to present their business, and in terms like everything, so starting from the accrual financials, ending with like where the real opportunities are, and what like professional buyers or like some family offices or other like buyers searching for. Yeah. So what is really important for us and what like isn't that much. Yeah.
So let me ask you this:
yeah.
you get the opportunity to look at a lot of potential offers every week, every month. Talk to the private label sellers and tell me, what would you like to see them doing before they go to market? I'm sure you're seeing some offers that really aren't that interesting because the sellers haven't done certain legwork. Tell me what you'd like to see them do more often before approaching potential investors.
Yeah, it's like this is a really, really good question, and I would say like just to better understand their personal goals with that selling, with that exiting. Yeah. So because I'm like, what we see like in terms like there is not that much that they can do like in short term to their financials or to whatever. So it's much more like midterm or long term strategy. So there is like some guys that also helps. For example, they consult you for half a year or 1 year, and then you exit your business.
Yep.
So, but this is like definitely something that's starting from 6 or 9 months. But in short term, what you could really like make the overall exiting process much simpler for you and for buyers when you like realize and you're really comfortable with your personal goals. Yeah. So whether you really need like as for example much cash at closing, or let's say you are more than okay and you're comfortable to have more in total but have some earnouts.
Yes.
Or for example you're not like you're, for example, you don't trust any buyer. This is why you wouldn't like to have any earnouts based on EBITDA, for example. Yeah, because or ESD, because you don't understand like what the costs they even include. It's very hard to track that, and even if you trust, but like at the end of the day, you wouldn't like to do that, and it also like sometimes like the deal falls short. Yeah, so I'm like just better understand what you are really searching for. You're searching for like in 1 month to let the business go and also like have another venture or just like have some rest, or you really would like to have some say like partner who will own the business, but you will be like the advisor or a consultant with really like strategic involvement there. Definitely not like day-to-day operations, but with strategic involvement,
right.
And have ability and opportunity to implement all the ideas, all the other stuff that you have in your mind, but you haven't the resources or time or whatever or energy to do that.
One of the things that I've seen with aggregators is that they're often much better at being able to fix the sourcing issues that a brand may have, whether that's going in and being much more aggressive in the negotiations, being able to do larger purchases of inventory at once. Talk to me about some of the types of things that you've seen where your firm's been able to go in and make significant improvements specifically from a sourcing perspective.
Yeah, it's like, you're absolutely right. That it's much easier because we're just dealing with that on the systematic basis. Yeah. And when you do that, you definitely much more competent and have more, let's say, like levers to use. Yeah. So definitely, a bit more guys there, whether it's China or other places.
Right.
So you could like much easier to benchmark your current prices, to benchmark your current costs, and to make that more, let's say, close to market one. So also sometimes definitely you also understand that there's a lot of sellers who don't realize that they are working with the middleman. So there's like the actual manufacturer. So it's also very easy. And when you have more and like more guys there, it's much easier to understand that and to work directly with the manufacturer. Definitely some current manufacturer, they aren't able to support the growth even like X3 or X5.
Yeah.
So this also like when you change that for another manufacturer, they also like, and when you bring even like let's say like 300K annual cost to them like tomorrow for new supplier, and like your current price, it's much easier to negotiate this new one if you're like changing because you need like higher like volumes. So this is like very, as I said before, yeah, there's no rocket science. It's very straightforward. The only way, the only, let's say, complexity, the only challenge here is the complexity. Yeah, so you need to know a lot of details in different places in the world. So there's like, for example, sellers that are manufacturing in Ukraine or in Lithuania or in Germany or definitely in the US. So we also like need to know the market there, how many other manufacturers are there, what the market prices, how to benchmark them, how to cross validate them. So yeah, it just like much more easier when you have that systematically and when you have the scale. Yeah, so
so with so many different investors in this FBA aggregation space, how does your firm Accel Club differentiate itself from other investors that are also looking at FBA businesses?
Yeah, it's like the first one, definitely like it's a little bit more. Yeah, I'm like we definitely first of all, like we do understand that we are making deals with people. Yeah, so even though we buy in businesses, listings, there's like physical goods, it's like retail. But first of all, we definitely try to make is as comfortable, as fast as I like as human as we could do that. Yeah, because we don't say that at the end of the day, like we're buying from some people, from some teams, and sometimes people really touch to their businesses. Sometimes they really treat this as the business and not like product, or they less touched and they really much more, let's say, commercial wise. Yeah, so we're just trying to really fit the needs that the current owners have, and try to make all the process starting from the first intro and like closing as human as it could be. Definitely we are much more flexible within the structuring, so we could offer different like stuff like let's say based your earn-outs on the revenue growth, not on EBITDA growth. So it's less sophisticated for sellers with us to check what we need to pay to them in 1 year or in 2 years. Because like as I said, yeah, to play with top line is much harder. Yeah, like it's very straightforward.
Right,
as far as you have like the access to Amazon account, and we definitely provide it with sellers. Top line, like how much we need to pay to you. So it's much easier. Definitely also there's like really fast growing sellers, yeah. And sometimes they just like wondering, they really don't like yet haven't yet made decision whether to sell or not, yeah. And here also like within the structuring, we could also like, for example, use reevaluation of the account in 3 or 6 months. And it is really cool because they do understand that if they like sell today, it's the same if they sell like in half a year. So we'll use the same multiple and apply to new LTM, to new like earnings, yeah. So and if they grow, for example, like 60% year over year or 100% year over year, they do understand that they will not like lose any money on the table, yeah. So they really like will get everything that they would if they sold to us like in half a year, yeah. So definitely like the second one is like deal structuring. Definitely I'm like in terms of the other stuff, we really like coming from operational business, and this is also like we do believe that it helps us to and really have like a good team in place. And these people, even though we with Max like haven't that much experience with Amazon, but there's like team members in our operational team who we're working with like top 25, top 50, top 100 sellers.
Yes.
So, and it also like make sure that we make sure that after the acquisition, a brand will really strive. Even though we do understand that maybe with some of them we will have some kind of problem, or there will not be that much growth, even if like you try to push that, yeah. So in other terms, like definitely the and I guess the third one, yeah, it's also very important. It's like we didn't have like any investment committee, So even though we have like investors, it's much easier for us. There's like at the end of the day, like me and Max, and we're like very straightforward and like very very transparent how we assess this or that brand. And as far as we are like we just go. Yeah. So there's no like let's say bureaucracy around that, whether it's like approved by other investors or not. So it's like very easy, to negotiate and to put the terms in place and to execute them, whether the price deal, whether the deal itself.
So let me ask you this. You've talked a little bit about this, but why would you encourage firms to exit now rather than wait for them to grow over the next 6 to 12 months?
Yeah, I mean, it's a very, very good question. Like, definitely we are biased because we are buyers. Yeah, so we definitely would love to much more like sellers to come to the marketplace and sell. But we do believe that there is like at least like 5 really, really objective like reasons why to do this right now. Yeah. So the first one, definitely there's like high demand for acquisitions. Yeah. So a lot of like money pouring today, and they are not utilized. So I'm like in the 1 year perspective, let's say, we do believe that it's like the peak of the deals will be like this autumn, because all that money that came like previous year, they will be like, let's say 50%, 60% utilized by autumn. Yeah. So, and when there is like high demand, definitely your multiples, your price would be like higher. Yeah. The second one, definitely we call this you or your competitors. Yeah. So definitely you could easily like track whom other buyers bought, and definitely a lot of buyers trying to like trying to avoid some niches where Thrasio or us or Purge or other players are. Yeah. So if your 2 competitors, for example, already are bought by some other buyers, then you're less attractive for other buyers, because everyone understands that, okay, in this niche, much more sophisticated game started. Yeah. The third one, definitely, I call it this no broken expectations. So this is what I mentioned at the beginning. So we do believe that a lot of these teams like us, we have some romantic let's say like rose glasses about the FBA business, and we definitely, I mean, every time I spoke to let's say more friends than sellers. Yeah. So the sellers said, who are my friends? Yeah. They just like trying to like, guys, you don't know where you are going. Like it's crazy. It's not like that easy to buy FBA business. It's not that easy to operate. So they try, to say, guys, like I'm like, it's not that easy. Yeah. We do understand that, but I'm like, but I do believe that a lot of like buyers, after like their first acquisitions, like 5, 10, whatever acquisitions, they will interact with all this bans problems, with this like gray black hats practices, definitely with less growth through other channels or through direct consumer or through other marketplaces through other countries. And maybe they even like sometimes like don't understand the proper all the like, let's say, the real overheads or the real FBA bottlenecks, like stock limits. Yeah. So what happened like last Q4. Yes. So we do understand that there will be like correction of expectation of these buyers. Yeah. And it's much easier to sell your business to the buyer that have that kind of like romantic, more like rose like expectations than, for example, when in a 1 year or in 2 year perspective, a lot of these teams like would be much more experience, will have much more experience with different like brands, different niches, and understand like all the pitfalls, and definitely will say, okay, like, but we couldn't like pay this or that because here and here and here we need to have discount because this and this and that will not work out this way that you're like describing. Yeah. So
you're saying the longer you wait to sell, the more informed the buyers will become. Yeah. And potentially more cynical will be about your business.
Yeah.
Okay.
Yeah.
Interesting.
Because and also like the COVID effect there. Yeah. I'm like today, like no one can really estimate the real COVID effect. Yeah. And it's much easier to sell. I'm like, you have that earnings for the last year. So I'm like, it's a very cool to, but let's say in August or even let's say in September, it will be like very, very easy to estimate what's really like natural growth and what's like the COVID effect. There will be like data not only for the last April or last May or last August, but for this August, yeah, and it's much easier to compare and say, okay, like this is COVID, this is not COVID. So this also like your real value today is higher because like no one could really understand that effect. And definitely, it's like also like what we believe definitely marketplaces have like the huge benefit because they really Amazon definitely invested a lot of money in logistic and in infrastructure. And right now, like we do see that what Shopify is doing, yeah, what other guys doing, yeah. So, and we believe that especially for the niches where the brands, where the products have the potential to be brand, like I don't know, like some cosmetics or other type of things where the retention high, and the direct consumer channels works, like Facebook works, other stuff works. We do believe that this kind there will be like more and more growth on Shopify channels, on other direct consumer channels, and less growth within the Amazon. Even though definitely it will grow, but the CAGR, the rate will be like different. So this also we believe that currently the expectation from the Amazon channel is so high, and this will also correct. Yeah. So in terms like the what the expectation from the direct consumer channels and what the expectation from the Amazon channel. So, and it's much easier to to persuade the buyer that it's like the niche has the capacity, for example, for some cosmetics, not like 50 million annual sales, but 100 million, 150 million sales.
Yeah.
For example, in 2 years, when there will be like even more Shopify stores, even more like invest in logistics all across the different countries, it will be much harder to convince any of the buyers that it's like that their consumer is small and all this growth happening on Amazon. Yeah, so definitely there will be like much more direct consumer, Facebook, Google Shopping, all that like instruments also will be much more utilized.
So let's shift gears here for just a second. I'd like to get your thoughts on what do you think will make your business, Accel Club, successful in the long run? What do you need to do to be in a better place in 2 years, 4 years, 10 years from now?
It's like we do believe that we need to become truly product-driven company. So it's much more about like to really understand the product market fit and to really have ability to understand that and to execute that. So this is like what we believe, because we also believe that it's like what I'm like a lot of buyers don't. I'm like I couldn't say a lot about them, yeah, because I'm like even though I talked to a lot of them, but I do believe that there is some kind of like underestimation of the real product cycles. Yeah. So we do understand that a lot of products they come, they go. Yeah. So they come, they go. So and this is what we believe that it's like having that kind of like internal infrastructure and merging that with the external infrastructure of Amazon or even like direct consumer channels with Shopify, etc., and really have like a real speed test of different products, packaging, whatever, in terms of like the real product market fit and the ability to to identify that and execute. This is what really like will give us ability to live here, to earn here in this space, or to die. Yeah. So this is like what we believe that will differ the great I would say like sellers or FBA aggregators here from the not that great one. Yeah.
Nick, I want to wrap up our conversation today by asking you a question around what are some of the software tools or other companies that you've worked with that have helped Accel Club get to where it's at today? Tools or companies that are very, very beneficial for your business to be able to do what it does?
Yeah. It's like definitely for there's like two different let's say story. Yeah, the first step is like M&A part. Yeah, so like to assess the FBA business, and here is like definitely salary board and other let's say tools that helping us to quickly understand the bottom line of the business. Other stuff, because like definitely everyone knows that Amazon interfaces sometimes like they are crazy, yeah? So it's not that easy to understand what's happening there. So this like from this point of view, yeah, definitely like fake spots and other tools that helping us to better understand whether there's like this product market fit is like really happening, or it's like some kind to not exist and it's more like fake. Yeah. And in terms of like the operational side, yeah. So definitely a great like PPC agencies and tools like Profit Whales, like account management. Like they also like help us to optimize the echoes, to optimize the campaigns. So that's great. And definitely work with different others within different other areas of expertise. FBA help also helping us a lot, so to inspect to with logistics. So I would say like it's common, yeah, but also like what really maybe some kind of like the advice for the seller. Make sure that you're working with the right manager on the service provider side. Yeah. So because sometimes like what your experience in terms like the your experience with this or that service provider really like makes a big difference with whom you're working on that side. So what and like we definitely sometimes we even change like account manager for us, and even like the quality just change rapidly. Yeah. So this like what I see, like there's a lot of great like tools, service agencies. You just make sure that you're like in the right hand from the account manager perspective. Yeah, manager side. Yeah, so it's really helps.
Nick, I want to thank you for joining us today on the BuyBox Experts podcast. For those of you interested in learning more about Accel Club, please visit accelclub.pro. That's ACCELCLUB.pro. Thanks for joining us today on the BuyBox Experts podcast. We look forward to having you join us again soon. Take care. And now to finish today's podcast, I'd like to share some final thoughts. For third-party sellers to be successful on Amazon, a critical lever will be soliciting feedback from customers. We at BuyBox Experts are really big fans of the team at Ecom Engine and its tools that help Amazon sellers to simplify the process of messaging customers of Amazon orders. To learn more, go to ecomengine.com. And with that, I want to thank you for listening today, and I look forward to joining you next time on the BuyBox Experts podcast.
Thanks for listening to the BuyBox Experts podcast. Be sure to click subscribe, check us out on the web, and we'll see you next time.